Hey guys, what's going on? Happy weekend, May 22nd. And in this video, we're going to spend a lot of time talking about the Vix Divergence because it means so much if you're a day trader or a swing trader to get this Vix Divergence accurate so you can explore some of these 10, 20x gains. For some of you that are new to the channel, you're thinking, well, Leo, what are you talking about? 10, 20x gains? Yes, guys, those were easy this week. Let me just break some of these down. This is what you've missed. On May 17th, we came out right after the Powell speech and said, look, buy puts now. We've sent the message when S&P 500 was trading at 40,078. So we didn't quite nail the top. And we didn't even have to nail the top in order for you to next day make 30x on this trade right here. So this was the alert right here that you would have gotten if you were a part of the alerts group, guys. This trade was super easy. After the Powell speech, the market was pumping, and we said to short the bounce, and we've nailed it within 16 points off the top right there. The next day, you know what happens. One of the biggest drops we've seen in the market in the last 2 years. Now, also, if you were part of the alert group, you would have known that we've reversed into calls right here in expectation of a market gap up higher on Friday, and that's exactly what we've got. Not a huge gap up, but just in perspective, some guys I was trading with, if you just picked up 10 Amazon calls when you send out this alert, the next morning, just on 10 Amazon calls, you would have made 20,000 bucks. Not bad. And interestingly, if you were following all these alerts precisely, would have known to reverse those calls. As soon as we sold those Amazon calls, we went straight into puts, and those Amazon puts did a 4x. Now, the best trade clearly was Tesla throughout the week, which we told you to short multiple times, with the exception of one point. We reversed into Tesla calls on Thursday when they bounced, and we promptly reversed into puts on Friday. And that Tesla trade, guys, broke every key level, and that was a 30x trade on Tesla. Now, some of the easy ones, guys, that clearly were pertaining to the retail sector, and we've nailed them before some of these big moves happen, as we always do here at 13 Market Moves. So Costco, we've sent you the message on Costco way before this 60, 70 point drop has ever materialized. As you can see, this is May 17th when we said to short Costco. We're suggested buying 485, 475 strike puts. Oh, next morning it was Armageddon for Costco. And Home Depot, guys, this one shorted on the black candle. Guys, if you haven't taken the charts divergence course, no wonder why you missed this simplest trades on black candles. Okay, study the black candles. It's going to make your life so much easier, guys. This was an easy 5x trade on Home Depot. Look right here on May 17th, before the market even opened, before we even got the retail number, 26 minutes before the retail number, I said short Home Depot puts. And one more time, as you can see right here, Home Depot 305, 300 puts at market open in on any bounces. And for those of you that think, well, what the heck is this? This is like a 20-point drop, guys. It looks a lot more spectacular on a smaller time frame. So the particulars are that we've told you to short the bounce on Home Depot. So after the Home Depot report, it bounced higher. This was the double top. This was the entry that we've sent out in the alert group right here, guys. And the puts were cheap, guys. This is the best time. I mean, I've had some new students that were asking me, well, Leo, why are we buying puts? This shit looks like it's going high. When do you think is the best time to buy puts? Damn it. When shit is dropping, a lot of times it's too late. Well, the way the market has been, even when stuff is dropping in these conditions, and you can get in even on a small bounce, you can still make great money on shorting this market and shorting a lot of these stocks. But when the market gives you an opportunity like this, when everything is dropping, this thing bounces, guys, you got to grab it. You got to go for it. You can't. A difference between a guy that looks in his Home Depot chart and says, oh, it's green. I can't be buying puts here. Let me wait to see if it drops. Well, by the time this goofball wait for the shit to drop, okay, he missed like 70% of the profits on this trade. So the guy gets in right here at $4. Same guys that watches it drop and gets in later when it's obvious now that stuff is going to drop. And he pays, 3 times more for the same option. So timing is key, guys. When you get these alerts, you got to take action. It's easy. And of course, 21x on target. Notice when we send you the target alert, guys, when target was right here. And guys, if you studied the patterns, guys, these patterns are easy. This is an easy head and shoulder pattern right here on target on the daily chart, which results in this drop right here. Yes, absolutely. We'll send you the alert to buy target 205, 200 strike puts. Guys, these were going for like $1.80. And the next morning, y'all know what happened to target. Those puts were worth $42. The puts we were buying for $1.80, we're going for 42 bucks. Okay, and so you could have easily done this. The key, guys, is hey, when everybody talks about it in the news, it's too damn late. You got to get ahead of the move. That is exactly what 13 market moves did for you. Again, we positioned you ahead of the move. Now, not all trades were perfect this week. As you know, one of the trades that we've been highly bearish about was GME, and that trade just didn't come through. It doesn't mean that it won't present some of the greatest market opportunities that could look just like this target trade right here. In the next 2 weeks, I think GME is going to give us perfect momentum to actually profit on both the call side and the put side. So stay tuned, sign up for the alerts, guys. Let's rock. Now, let me bring up this VIX chart. Whoa, what the heck is this? Guys, this is the chart of VIX. Actually, I was breaking this down to a student on one-on-one coaching here who actually made over $280,000 this week. And he wanted to understand, whoa, what's going on with the VIX? So let me just break this down for you guys. And see if you can benefit from this. All right. So the normal conditions of the VIX are such that when market drops, VIX goes higher. And so just to be clear, before I go into the explanation, what I've got here is VIX. VIX on this chart is in green and red. This purple line or pink line is a comparison line between VIX and S&P 500. S&P futures /ES. That's what the pink line is. So pink line represents the market. The green candles and the red candles represent the VIX. So let's start at the beginning of the chart right here. When the market is dropping, the typical relationship between the VIX and the market is such that when market is dropping, VIX is going higher. All right, so this is what we get, right? VIX, strong green candle action right here. While the market is dropping. Okay, now that is a relation between the mix and the market in 90+% of the cases. Now I want you to see how this divergence here actually evolves, and that was part of the reason we were able to switch you from puts to calls on the Thursday, and the market did gap up the next day based on the divergence. But at this point, we're noticing some interesting facts here that are telling us that VIX is behaving in such a crazy way right now as if somebody is artificially trying to suppress it. And so we're actually going to take a look at the option chain as well. So for those of you like, man, the markets are rigged, Leo. Yeah, they are to a certain extent, but it only gives you greater opportunities as a trader, as a short seller, to take advantage of such conditions. So again, the general condition is market drops, VIX goes higher. Now notice there's 3 instances here in the last 20 days. This is a 20-day, 1-hour chart where market goes to 4,300. And so as market is here at 4,300, where is the VIX? The VIX is at 27. Notice the second time the market gets to 4,300, look where the VIX is. It's at 28. So if you've been following the 13 market move sequencing, this is actually signaling a potential bear move in the market, because when the market goes higher, well, VIX is supposed to drop, right? So we're at 4,300 here, VIX is at 27, the market goes back to 4,300. Well, VIX is no longer at 27. Now VIX is elevated. That is actually a case of a bear divergence. As the market goes higher, VIX also goes higher. That's bear divergence. And look what happens next. From 4,300, the market drops all the way down to 4,060. 4060, guys, 240-point drop in S&P 500. Now, when that happens, VIX resumes its normal relationship or correlation with the market, which is it moves higher right here to a level of 36, 36.64 to be exact. So basically, from 4,300, the drop to 40.60 produces like a 30% move higher in the VIX. Everything looks normal. Now, we're back to 4,300 from 40.60. S&P 500 futures go back to 4,300. Now look what happens now. Oh, VIX is at 25. Okay. Hold on. We're at 4,300 here. VIX was at 27. Now we're at 4,300 here. VIX is at 28. But now we're at 4,300 and VIX is at 25. So now VIX is actually lower than the prior reading right here and then the prior reading right here. What's going on? That's a bullish divergence. So the third time market goes to 4,300, VIX drops to 25, which actually gives us a case of a bullish divergence. And what typically would happen next is the market would move even slightly higher. But we're getting exact opposite of that. So this is where the correlation gets broken and VIX is actually getting disconnected. All right, we get this major move to the upside in the VIX while the market keeps resuming the drop. And so now VIX is going back to 35. Okay, notice we're at the same level right here, but VIX is at 35 instead of 36. And notice what happens next. It drops, the market drops all the way to 38.60. Now 38.60 is way lower than 40.60. That's 200 extra points lower. And what happens to the VIX right here? Well, it's still playing with around 35.8, 34.8. So basically a much greater move lower in the market, and the VIX cannot break above that 36.64 level. Now, generally, we would consider this as a highly bullish setup for the market to actually rocket higher. But what we've noticed here by this example, remember from 27 to 28 to 25, we had bullish divergence here. But in reality, we got exactly the opposite of what we'd normally get after a case of bullish divergence. Okay, so we're continuing getting this bullish divergence on the VIX. Let me elaborate a little bit further. On Friday, the lowest point the market reaches is 38.07. And look what happens to the VIX. It's at 33. Okay, so we had a VIX of 36.64 when the market was at 40.60. In normal relationship between the market and the VIX, when we hit this lower level of 38.60, VIX should have been above 36 already. It should have been at 37, 38. When we hit even a lower level at 38.07, especially on the magnitude of the volume that it was happening within the time frame, VIX should have been at 40, guys, but it didn't happen. It stalled out in both instances at 33. And there's a huge difference. And guys, there's a 250-point difference between the S&P 500 futures level right here. There's no way VIX should be lower. So what we consistently keep getting a bullish divergence here. But what is a major concern is that this is a temporary disconnect, just like we have seen a disconnect right here when VIX drops to 25 and the market should actually the next day supposed to move higher. We get the exact opposite reversal, right? And so we believe this disconnect in the relationship, the normal correlation between the VIX and the market should be interpreted exactly the opposite the way we would normally interpret it. So we should take this instance quite seriously, and the fact that VIX has not rocketed higher, it doesn't mean that it's absolutely not about to explode. The only question is, when exactly is that going to take place? If you have the answers to that, then you can rock and make a ton of money. So let me break this down utilizing the option chains. One more time, I'm going to summarize this chart, okay? VIX had a normal relationship here until we got to this part right here on the chart. Instead of the market moving higher, we got a major reversal. Despite of the market dropping lower and lower, the VIX did not break out higher. Not only did it not break out higher, but it actually went lower in relation to where VIX were when the market was at higher levels, such as 40.60 right here and right here, such as 38.60, okay, and it drops even lower, and VIX also goes lower. So, huge bullish divergence on the VIX. Normally should be interpreted as the market is about to bounce strongly higher. But we don't believe this is what's going to take place. And in order for you to understand what time frame you should be utilizing for correctly interpreting this trade, let's glance at the option chain. Two charts before we look at the option chains. VIX right here, guys. Friday, May 20th, 2022. I mean, clearly when you look at the daily chart of VIX, right? I mean, this is exactly what I was showing you in the 20-day chart. You see, it's lower high, lower high, lower high, lower high, lower high pretty much every day in VIX, while the market goes lower and lower and lower and lower. VIX should be rocketing. It should be exploding higher, okay? So is it manipulated? Sure, there's a great chance it's manipulated, okay? But when we look at the VIX chart right here, we get major bullish signals. And we could be looking at VIX exploding to the levels where the market has never ever seen it before. And after you take a look at the next 5 instances of option chain slides right here, I think you're going to understand exactly what could be transpiring here. So let's take a look at the option chain right here. Now this one expires on June 1st. Not a whole lot of activity going on either direction, okay? So on the put side on VIX, very few contracts. Basically, nobody really thinks the VIX is going to drop. Very few people that think VIX is going to drop. They think, okay, maybe it's going to drop onto 25. So there's no activity in strikes like 20 or anything like that. So that rules out the huge rally scenario. So there's definite dissonance between what we're seeing here on the option chain and what's really going on the chart of VIX. Okay, there's clearly some elevated activity on VIX here, but notice the strikes. Okay, we're only talking 35 strike, 30 strike, 32.5 strike. We're seeing some activity in the call volume. Basically, these participants are thinking that the market is going to move higher, but the market is going to move lower, but not crazy lower. Let's take a look. Now, these expired 11 days from now, but let's take it a little bit further. June 8th, so that's 18 days from now. Nobody really thinks VIX is going to drop within the next 18 days. Some people, very few. I mean, these option activity on the VIX, basically, it's like non-existent, okay? So nobody's thinking that, with the exception of just a few people. Interestingly, they're betting in a 45 strike at this point. Not a whole lot of stuff going on. Let's forward to June 15th expiration, okay? And this is where things get actually interesting, all right? Now, all of a sudden, on the put side, now we've got in the 26 strike, we got 45,000 in volume. Just, Friday, May the 20th, we've got some activity in the 25 strike, 10,000 contracts. 29 strike, 14,000 contracts. We're getting some activity here, all right? We're definitely seeing some unusual activity on the call side. Now, 24,000 contracts on the 35 strike, 16,000, 14,000. But where it really gets interesting is this 55 strike. We got 28,000 contracts going in at 55 strike. And what's even more interesting, we got in the 90 strike, we got heavy participation, 45,000 contracts. All right, so clearly, there's some major call activity going on into this expiration. Now, this is what's so weird. If you're trading VIX, it's very important to pay attention when do VIX contracts actually expire. So when it says June 15th, they actually don't expire on June 15th. Where they expire is June 14th in the morning. And this is what's so weird because the catalyst for this is clear, right? For those of you maybe that, you've been somewhere sleeping under a tree, you might have not known that the next Federal Reserve meeting is exactly on the 14th and the 15th of June, which normally would mean that at 2 p.m. on the 15th, we would get the Federal Reserve decision. Now, these contracts, again, by this time, they would have expired. By the time Fed would actually make the decision, these contracts would be beyond their expiration time. So what does this really tell us? Well, this tells us that the market participants, okay, so the contracts would expire right here, right? So not here when the Federal Reserve is going to announce the decision, but the contracts would actually expire right here the day before that. So the day after that, the week after that, we can see that nobody's really buying stuff right here. I mean, nothing is going on, right? Not the call side, not the put side. I mean, basically as if nothing is going to happen in the market the day after or the week after that Federal Reserve decision, okay? Which really leads us to only one sort of scenario why so many contracts would be going betting that the market is going to drop. And what they're really betting on is the fact that the market is going to drop in the expectation of the Federal Reserve decision. When we're betting in the expectation of a particular event, you would normally want to target that move 3-4 days prior to that event. So the contracts would expire here, which means based on the current activity, the market is projecting the biggest drop to be on the 8th, 9th, 10th, and 13th and 14th of June. So when you're considering trading VIX contracts, I mean, these are going to be your lucky days, right? June 8th, June 9th, 10th, 13th, 14th. These are going to be some major moves in the market to the downside based off the current activity that we're seeing in the contracts as of May 20th. Now, all of that stuff could change clearly, okay? But based on what we're seeing right now, this is the move that they're targeting. They're targeting the biggest drop to come before the federal rate decision announcement. Now, if we're to combine this with a historic analog, some people got confused because I've been showing two historic analogs, right? One, bear market, 1974, and that is exactly where the market is going to go in 2022. But on a shorter time frame, I've been using the analog from the crash of 2018 in December to show you the day-by-day candle development based off the tornado pattern. So if you want to focus longer term of where we can combine this information, what's happening now to where we could be going, okay, it's clear we are right about here, which means temporary for the next week or two. We may not see any huge moves. Okay, the market is sort of going higher, lower. Okay, still overall not bullish scenario. Okay, and we could even potentially get a bounce, which could be followed by a huge drop. So basically, the strategy is simple. The moment you see a bigger size bounce, okay, that's when you want to load up on VIX calls, SPY puts. All right, so be patient. Okay, because some of these intraday bounces, drops, I mean, they're going to happen. Wait for a bigger bounce to get in on the short side. If you're a short seller, you want to wait for this huge bounce. You want to position yourself, okay, buy a ton of VIX and buy a ton of VIX calls. And for some of you that are a little skeptical, why are people buying 55 strike calls on VIX? Why are people buying 90 strike calls on VIX? Let me give you a little bit of a historic perspective. And if you pay close attention to the videos, you would know that the way you select your strike price on the contracts is not based on where you think the price is going to go. In other words, people that are buying the 90 strike contract on VIX, they're not buying it because they think VIX is going to go to 90. This is the number one mistake that option traders make. They calculate where they think something is going to go, and then they buy that contract. For example, if you think Tesla is going to drop to 500, a typical mistake somebody's going to make is they're going to go and buy the 500 strike on Tesla. That's not going to make you any money. If you think Tesla is going to drop to 500, you need to be buying 600 strike puts. And I know it sounds weird. Oh, Tesla to 500. It was just at 1,000. Well, we told you when it was at 1,000, it was going to go to 780. And if you were part of the alert group, you would have also known that we switched our target on Tesla to 580 recently. And it just dropped to like 620 bucks on Friday, guys. So sounds like crazy numbers. Sounds like the market is changing at the speed of light in a very short amount of time. But based off these VIX contracts, the situation could absolutely explode. And what I mean by explode, again, there's a huge number of VIX contracts that are buying in the 90 strike. They're not buying VIX contracts in the 90 strike because they think VIX is going to go to 90. They're buying these contracts because they think VIX could go above 90. That would be the reason to buy the 90 strike. And there's only 2 instances in the last 20 years, basically, that this happened. One was during the 2008 collapse when VIX shot up to 90. And the second one recently in the last 2 years when we had the COVID scare, the COVID crash, which if you've been following the channel, you know that we've accurately predicted before anybody else did, giving you a 2-month notice before that major crash took place. Right here, guys, this is as high as the VIX goes. But based on the crazy volume that we're seeing right now already going in the expectation of the scare ahead of the Federal Reserve decision, okay, we could see actually in the next 2 weeks 100 strike being traded or even higher. The situation here looks pretty bullish if you look at the VIX long chart. Unfortunately, we don't have any data for the 1973, 1974 time frame. Maybe the VIX, maybe that was the instant where the VIX actually shot up above 100, 150 maybe. But in this particular case, we're looking at a potential cup with a handle. And if VIX does explode here in the next 2-3 weeks, we could see it above 90, guys. We could definitely see VIX above 90. So get ready. If you're not sure how to trade this, guys, I mean, this is a beautiful, beautiful chart that could make you a ton of money. But if you don't understand specifically how to translate this information in terms of a specific trade, if you don't know what strikes, what expirations, if you're not sure, maybe there's some other trades that we're considering here at 13 market moves, right? There's no way you would have thought 13 market moves shorted Target ahead of the earnings report to capture that 21x trades. If you're wondering, well, there's some other trades like this out there, Leo, that you're going to post later. I want to be a part of them, guys. Well, if that's the case, go to 13mmtv.com. Sign up, study some courses, sign up for the alerts, reach out to the 13 Market Moves coach. Guys, things like this don't happen in the market every day. And when the market gives you the opportunity of a lifetime, you should grab it. You should absolutely go for it. So stop staying on the sidelines. This is not the market where you want to be on the sidelines. I mean, it pisses me off when people on TV say, well, cash out and stay on the sidelines. They were the same people that were telling you to fucking buy the stock market 2 months ago and 4 months ago. And, you know, before the damn thing dropped down now, what, 20, 30%? So why is nobody telling you to short the fuck out of the market? That's what pisses me off. Okay? If half of the Wall Street analysts would have just said, well, instead of buying the dip, why don't you just short the bounce? Do you know how many retirement accounts would have been saved? Do you know how many people would have actually made money and prospered in the last 6 months? Guys, it's absolutely insane that investors can only see the market as a one fucking direction. Oh, it can only go higher. Bullshit. I mean, go study the history of the market. It's been so many crashes. And we're heading to a potential insane move. A potential move that could exceed all these highs in the VIX that I'm showing you in this 20-year chart. And if you don't understand how meaningful this is, how huge this could be for you, for your family, for your loved ones, for your dreams, guys, I'm telling you, this is a very, very rare circumstance, and I want you to be a part of it. I don't want you to miss it. So with that said, learn to short the bounces at 13mmtv.com, guys. Study the divergences. Study the correlations, guys. How many trades I've shown you in this video, right? The Home Depot trade, the Target trade, all these trades that based on correlations, which we show you in Trade Like a Rockstar course, you could have nailed all of these trades this week. But if you missed, it's not too late. Fuck it, let's go. I'll catch you guys in the next video soon. Take action today. Do it now. Schedule a call with 13 Market Moves Coach. Let's roll.